1, 2, 3, go. Ooh, monthly candle chart. Guys, I was looking at this just not too far back, and I was really aiming for a crazy breakout. Monthly defined breakout line at 48.50. And look at that. I was really looking at it here. We had embryonic monthly defined breakouts, a few levels getting overpassed. But the twin towers previously hard test, price action, sellers coming in, creating those wicks twice, 1, 2 shots. Here, consolidating close to that final barrier before going upwards, and did not make it. Price action got sucked back in. Probably multiple whipsaws here on the smaller time frames, giving you signals that this was going to break out. But if you did not respect monthly defined breakout line, monthly defined resistance, then you would have got hit a few times. You could have said, man, why isn't this breaking out at these levels here? And then you'll say, okay, I get it. So this is a perfect example, monthly candle chart, guys. Didn't make it. And after that, monthly breakdown in progress. Wow. Okay, let's check it out. Arrow. A few things happening here. I think there's a breakdown right here. Zoom in. Lots and lots of stuff here. Okay, monthly defined breakdown. Right here, this smaller pattern closer to the breakdown line, giving a target that goes beyond this previous low. So you know that you could have a chance here of buyers coming in, put the price action back up. They did during the next month after this breakdown. But after that, the sellers came back in, price action below the 12-month average, starting to angle it downwards. And when the 12-month average is going downwards, well, all these pullbacks on the smaller time frames, they're usually just simple pullbacks, simple corrections, they're not reversals. And then you could play them off strategic areas of previous support and resistance, that those moving averages giving you good risk to reward entries. And this target, guys, is bringing us all the way back down to this previous base. And right here, this level is previous resistance turn support. So a target, I would adjust my target just right about here. So on the monthly candle chart, the next logical target is right here, down here at 32. And we're almost there. So probably next month, we're going to probably dip, touch that, maybe sink through. And then we're probably going to have some... maybe a bounce back, consolidation work, and then that 12-month average, we'll see what happens here. Either we bust up, go back up again to retest these higher levels here, another go at the that insane monthly defined support, resistance, or we go down. Continuation breakdown, then we go down to lower levels, hit support, bounce back up. It's the same game over and over and over. Respect previous support, respect previous resistance. It's going to help you understand why the price action is going back up, why it has to digest. People saying that this is a level is important. I think it can't go lower than that at that moment. So buyers come in and they have to get to retest, bounce up, previous support and resistance, then go retest, and then you go down, forming other patterns with implied measure moves, bring you to other levels to test again. Just building blocks. Not as a clean cut as a just pure Lego blocks, but if you look at it, support, resistance, you bounce off those, and then you get the drawings, guys, that we always have, up and down, never straight line. Monthly, downtrend, weekly. Let's go look at this beast, man. Oh, all drawing tools. Man, this chart is messy. Whoa. Okay, red area, underperforming the SPX. 30 moving average declining, price action below 30 moving average. Out of the Ichimoku cloud right here. So right here, right around these levels here. Breaking down, sideways move, breaking down. And right now, what we'd like to see is that bounce of that monthly defined. Let me just put that line back in. Right here. Bounce of that monthly defined support. And eventually maybe come back and test this breakdown line of this consolidation pattern right here. And after that, go back down. If that holds, then you have a nice potential short here. Hopefully 30 moving average is going to start angling downwards. And then you could enter right here in the stage 4 continuation. If that doesn't hold, it's not very good. Then, yeah, if that doesn't hold, that means the next previous support and resistance all the way up here and then go down. You're still having lower lows, but I don't like the fact that that you're overriding this breakdown pattern here. This sideways move consolidation that broke down, I'd consider that a previous high that you don't want to overcome. So this is the best case scenario. If it runs through that, that's one more step, neutral territory before you get into less. The weight of evidence is not 100% in the stage 4 decline if you're able to overcome these previous highs, guys. So right here, expecting pullback off that monthly target, reaching that monthly target, and then pulling back even higher, guys, right here, right above here. 1, 2, 3, 4. Then it broke down here. So right above here. Put an alert, 36, 30, 36, 50, 37. And that's going to make us closer to the 3 moving average. And then you could play for off that. Other weight of evidence you have to look at. You want that contracting volume. If on those green candles, when it pulls back, you want small volume here. And after that, you want that big dumping, that big red volume here on these candles. All these moves, huge red candles. You want to see them on those candles. Pretty cool, right? On the pullback, you also notice you're probably going to slow down, or the SPX is going to start outperforming you. And then when the lull's complete, when the price action starts going back down, you're starting to underperforming the SPX once again. That's a confirmation. These lulls, see right here. Right here, see why I did that? That's, you're confirming that that's the pullback. That's where it ended. Even here off this breakdown, pullback, and when the price action starts going back down, this is not bad. Better risk reward entry, protected by that previous support and resistance. That could have been a good entry here. A little off the 30 moving average, but a potential entry. Another one here. So you see how I'm identifying potential entries, knowing when to enter. You're going to remove that FOMO, that fear of missing out. Oh, it's breaking down. And because if you enter right here, you're going to bounce off that monthly defined support. Just wait for that. Wait. And you'll be good to go, guys. All right, that's it for cnq. From potential stage 4, stage 2 breakout towards the top, we're actually in a stage 4 breakdown. All right, guys, thanks for watching. And subscribe. Thanks.